Welcome to the Delaware Mortgage Rate Weekly Market Update for the week of October 31st, 2017. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week we did see mortgage interest rates move higher. Hopefully you took our advice to lock at the beginning of the week, because we did see that the bond was probably going to sell off. So if you take a look at the bond chart on the screen, you can see mortgage bonds kind of did a head fake. They've been selling off, kind of bounced off some support, but hit a real tough ceiling of resistance. And as we predicted, they returned lower by that ceiling of resistance, sold off, bonds moved lower last week, which made mortgage interest rates move higher. Now on Thursday and Friday, the bond had hit the 200-day moving average and was able to rally higher off of that. So with Friday's green candle, we're going to recommend cautiously floating your Delaware mortgage rate to start the week, to see if mortgage bonds can rally higher and move interest rates lower. Now, if they break below that 200-day moving average, that is going to be a very bad sign. Mortgage bonds have a long way to run down, which means interest rates could move higher again in the short term. So cautiously float your interest rate to start the week. See if we can rebound off the 200-day moving average, move the bond higher, move interest rates lower. Now, in economic news, a big report last week was gross domestic product, or the GDP. The first reading for the third quarter came in surprisingly higher at 2.9%, above expectations at 2.5%. Now, remember, the GDP measures the total dollar value of goods and services produced over that specific time period. So in this case, over the third quarter. So it's basically showing you the pace of economic activity. Now, a reading of between 2.5 and 3% is a great reading for a healthy economy. So that 2.9% number looks very good. But when you dig into the report for the GDP, all was not well, because consumer spending grew by only 2.1%, and that's the major factor in determining a healthy economy. And consumer spending dropped from 4.3% down to 2.1% from the second quarter to the third quarter. So that's not good at all. And then the spike up in GDP had to do with a 10% rise in exports, which will not be sustainable in the fourth quarter, because those are sometimes one-time exports there. So we'll have to keep a lookout. The outlook for the GDP of the fourth quarter is to drop to 2.1%. So we'll have to keep a monitor on that and see if this was a one-time jump or if we're seeing a rebound in the economy. Weekly initial jobless claims came out on Thursday. They came out at 258,000 claims, which is a drop of 3,000 from the previous week. Very strong numbers on weekly initial claims. 86 consecutive week below 300,000 claims. So this is going to support a very strong jobs report for October, which is going to be released on Friday, November 4th. So we'll have to keep a lookout for that. Now, in housing news, we saw new home sales for September 2016 rise 3.1% from August of 2016 to 593,000 homes sold on an annualized basis. That was below expectations of 610,000, and August new home sales were revised lower from 609 reported last month down to 575. But that's not really a bad report, because new home sales are still up 30% from September of last year. So that's some good, strong numbers for new construction. And then on existing sales, we saw pending home sales for September 2016 rise 1.5% and are up 2.4% year over year. So that was better than expectations of 1%. And pending home sales measure the number of signed contracts to buy existing homes. So that's a sign of future closing. So that's a good number there. NAR is reporting that realtors are feeling very strong because foot traffic is starting to tick up, and it's stronger than it's been all year long. So that's a sign that we're moving into some good home sales. And then Case-Shiller Home Price Index for August 2016 was released last week. It showed home prices increased 5.1% from a year ago, and they're up 0.2% from July 2016. So again, this report supports a stable housing market that can sustain the appreciation rates of around 5%. Now, in the local news, the next free first-time homebuyer seminar is Saturday, November 19th from 10 a.m. to noon. That's in Newark, Delaware, at the Christiana Hilton Hotel. You can register for that event by just calling the office 302-703 or 0727, or you can register online at www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.